Welcome back, family, to another week of trying to escape the matrix and live a life that we want to live. First of all, happy Monday, start of the week, and what a beautiful spring day, at least for y'all out here in the US on the Northeast. Beautiful day today. So why don't we just get right to it and start off. How much did I actually make last week? Not how much did I make paper trading, not how much did I make in the prop firm day trading that I still have to pass the combine for, not how much did I theoretically make on anything, how much got into my pocket this week. Let's talk about it. So this week I made $173.30. That's it. Hey, listen, it ain't much, but 173 is something that we can work with. So how do we get that money? Why do we get that money? I never actually explained to y'all what I'm doing with the dividends, how I'm positioning myself, and why I'm positioning myself. So that's something I want to really talk about today. So first, let's get down to the dividends. All right, y'all, I forgot to add, this ain't no financial advice. This is financial entertainment only. Please do your own research. All right, so let's get it. Number one, first, we made, see right here, $4.61 with stretch. Man, they ripping. Anyways, we made $48.79 with ULTY. My personal favorite, we made $104.44 with MSTY. And last but not least, we made $15.46 with MBDY. All right, so let's talk about it. STRC is stretch strategy, formerly MicroStrategy. It's their perpetual preferred stock designed to stay at a par value about 100 and have about 10% vol. And so with that, it's basically digital credit, or designed to be digital credit, and designed to be something that is stable and you could use almost in place of a CD or some sort of high yield savings or high yield instrument. And me personally, I love it. The only thing better than money later is money right now, right? So if I'm on a Bitcoin standard, why wouldn't I love something that allows me to extract the yield from the Bitcoin itself without selling Bitcoin, right? And that's basically what Stretch is designed to do. And so with that, I'm actually trying to grow that portion of my portfolio right now, as I feel if you don't know what to buy Stretch. So worst case scenario, you'll probably be down 10% versus just buying the S&P 500 or something else. And yeah, it's stable money that you can pull from at any time. It's a liquid instrument as of right now, and you can kind of just put your money in there, save in it, collect income, buy other things, or reinvest back into itself. Now, what's ULTY? ULTY is an income option strategies ETF. Runs a cover call strategies on a couple different tickers, and that actually I'm trying to work out in my portfolio, as I bought that a while ago when I was first trying to make income, not knowing where to put money, and its yield was nice, and so I bought it. And so I'm gonna keep it and let it keep paying me and just keep redistributing, because honestly I don't mind it. Now, MSTY is a covered call strategy ETF designed to pay you based off the volatility of strategy. I love it because strategy is extremely volatile, and so the payments are always high. The downside is your payments can be extremely volatile because at any time MicroStrategies can be up or down 50%. So right now I'm actually accumulating MSTY because strategy is below its 200-week SMA. When I'm gonna show you that in the charts though, when we get back. NVDY. So that's a cover call strategy on NVIDIA. And so it's designed to pay you based off the volatility of NVIDIA. I like that because this AI revolution so far ain't going nowhere without NVIDIA. And so why not get paid from the volatility that I think has a high probability of happening? Now, with all that combined, we've created an income strategy for ourselves. Now, the whole point of this income strategy is simply just to make income. It's just to get money from the markets. So what we're trying to do is pair low volatility instruments, lower yielding instruments with high volatility instruments and high yielding instruments. So what does that look like? If STRC stretch does what it's supposed to do and stays at a semi-fixed level and pays a steady yield. Now it is a variable dividend, variable rate dividend, not a fixed rate dividend, and so that means any month they can change it. Even if it pays 5%, I don't really care. I love it. I love that it's backed by Bitcoin, and I love if it can stay stable. I love it. I love it. I love it. I love it. Okay, so what you do then is you take that stable instrument, you take that stable money, and you just wait, and you stay patient, and you wait till high volatility instruments, high yielding instruments, whether it just be growth assets or something like a cover call strategy on a growth instrument via MSTY, MBDY, ULTY. You want to buy that when it's low, because then your rate of return has an extremely high compounding rate. All right, and you're always going to be building on your income, taking advantage of when the high volatile assets are high in the sky, getting paid, not buying them, only buying them with their extremely low, near their yearly volatility low, or near their 200-week SMA. With this, you can create with AI, I'm not gonna lie, I did use ChatGPT and I used Gemini. I ran simulations on how this would work, and we got a 50% annualized rate of return with a 10-year timeline. And so, hold on, trying to cross the street. And so that's with just buying the assets themselves. You get something very similar with implementing that in your income strategy. So what you do with the money from the income strategy is up to you. Me personally, I continue to compound my assets, and I continue to buy back into the market when it's advantageous for me to do so. Be mindful though that you just don't have to do this with a Bitcoin standard. You can do this with a gold standard. You can do this with buying houses. You can do this with anything, mixing tech, finances, consumer stocks, high growth, whatever. Crypto, you could do it with anything that you want. And so if you want to do it with real estate, you can do something like REITs. You want to do it with something like gold, go ahead. go buy gold and go get some sort of yield or some sort of bond backed by gold, or some sort of yield bearing instrument backed by gold, assess the risk and go for it. The whole goal is to mix stable, low growth assets with something that is high growth at an advantageous time. So there's only one thing better than something that yields 20% a year, is buying it at the bottom and yielding 100 and 200% over 3-4 years, maybe more. All right, another thing I want to do today is tell you guys about my swing account. So I haven't told you guys about this account yet because I've kind of really been working out the strategy and how I want to play this and how I want to go about this swing account. Since for me, I truly believe that currently right now I have the ability to have a successful account when it comes to swing count. I've swing traded multiple times in the past, and personally it's worked out for me. I wanted to go further out on the risk curve, try more advanced things like maybe getting some leverage trades in. I'm not really an options guy, I'm mostly a shares guy. So when I say leverage, I mean more so like leverage shares and things of that nature. So yeah, we have this account here. It's at $2,300. That's today, and we're gonna try to do our best to grow that. Now I want to talk about my approach when it comes to the account. It's extremely similar to the approach I told you with how I plan to just compound, you know, mixing low yield, low growth or no growth with high yield, high growth assets. And so I only buy things when they're near or at their 200-week SMA. Right now, same thing, I'm accumulating micro strategies. And I stopped really putting money in that account. I only put money in that account when it's here or there, when I have a little extra to toss in. And I'm running an income strategy within that account itself. Now it's less than my large account, where I'm getting $73 from this week or last week, and I only got $7 from that account. But like I said, I'm running the same strategy. I'm accumulating MSTY right now, accumulating MSTR right now. I have a position in stretch, I have a position in MVDY, I have a position in QQQI, I have a position in one bit. And so with all those, I try to, like I said, accumulate at value levels, and then things are at levels I don't want to buy. So yeah, we're gonna see what we can do with that account. I think that Microsoft is also something to buy. I do have a position in leverage Microsoft. Here, it's not that much. Currently down a little bit. Planning to really start to add in when it's below the 200-week SMA. Oh, what's up, homies? Yo! I'm scared. Help me. We will see what happens with that account. I'm going to try. I don't really have a goal monetarily with that account. I just have something in motion now where I'm going to try to compound it, right? And hopefully over the course of a year and a half, I can maybe 300x that account. So we'll see what happens. My ultimate goal is really to just get that account to like $100 a week of income so I can buy back into positions, just like I'm doing with my $7 a week, $10 a week worth of income right now. And we'll just kind of see where that goes. I truly believe in a year and a half, we can compound, because we buy in at levels of value below 200 week SMA, we start to get leverage. And yeah. All right, the last thing to check up on is day trading. How's that going? So last week I told you all I was adding in some feeler positions and seeing how I feel, and it's kind of been working out for me, kind of not, because what's been going on is I've been noticing that I'll actually get in trades, and the trades that are winning trades, I actually end up losing, I actually end up making less than my losing trades, because 9 times out of 10 on my winning trades, I'm not getting filled on all my orders. I'm only getting filled on 1 orders, and I'm trying to get filled on 2. So I'm gonna try to tweak my risk with that. But like I said, I'm kind of really not at a loss with the day trading stuff. I'm kind of really not pressured with the day trading stuff, since we do make money from the market in other ways, and that's gone. And I'm a lot more confident in my ability to swing trade, position trade, and just extract yield from the market in general. I mean, over a long time frame, we made money, and yeah, I'm just kind of better at that. So with that being said, I think we took only 2 trades last week. One, I believe, on Tuesday, another one on Friday, and we ended the week down $34. I'm really not trying to like get scared, not trade, or have too much fear or animosity when it comes to the market. I want to be really emotionless when it comes to the day trading stuff. I'm in, I'm out, separate my thesis when it comes to day trading, investing, swing trading. The psychology is so important, and you can be good at making money from the market. That doesn't mean you're a good day trader. That doesn't mean you're a good swing trader. That doesn't mean you're a good position trader. That doesn't mean you're a fantastic investor. You can extract money from the markets in so many different ways that you could be one of those and be okay. You could be none of those and still collect some money. But hopefully, if you're doing it right, you're collecting income and you're compounding your assets and growing. Or sorry, I should say compounding your wealth and growing. If you're trying to attack the markets in more ways than one, like me, it's all good. If you're not good at everything, as long as you're making money, that's all that matters, right? That's really the point, right? Get out here, get some money, live your life, be free, do what you're good at. Try multiple things, try your hardest, you know what I mean? But don't sweat it if you're not good at everything. I just want to go back and show you all the charts, show y'all why I'm accumulating MSTR, why I bought some Microsoft now. Like I said, when I started the swing account, I wasn't doing that good. I got kind of excited, got into some position, wanted to make some money, lost some money instead. So I am in a little bit of a leverage Microsoft when I shouldn't be yet. My average should be a little bit better, so I'm gonna show you all, but luckily I haven't really gotten in too deep on that. Also, I'm gonna show y'all why I'm accumulating Oracle, or why I have accumulated some Oracle again. I actually got in a little earlier than I should have, but that one I kind of averaged in a lot, pretty decently on. Not too upset about that, because my position size is small and I don't really plan to accumulate those unless we're below the 200 week SMA. Then again, massive accumulation starts. So I'm gonna show you all again what those charts look like, what I'm talking about with this 200 week SMA, and I'm gonna show you all my day trading prop firm, what the hell is it called, the test, whatever it's called. I'm gonna show you guys my 2 trades. Now I was gonna say I took 3 trades, but really 3 positions, only 2 trades. Again, I'm gonna show you all in a second when I get inside. Alright, we back inside with the busted window. Alright, so here's what I mean about, don't ignore this, this is today. Took a little loss. But Monday, not Tuesday, Monday we took a $75 loss, $75.51 win, sorry. Friday, see how it says 2 trades, there's really only 1, 2 contracts, $110.23. $110.23 loss. So, what are you gonna do? My one thing, like I said, is I keep getting filled on 1 contract for my winners for the most time and 2 contracts for my losers for the most time. So, I'm gonna try to even that out by getting filled on 2 contracts from the start and just treating the trades a little differently and instead of trying to average down the way that I am. So that's pretty much it for the day trading stuff. Now I want to talk about MicroStrategy. Now strategy, formerly MicroStrategy. So let's go to the weekly chart. Right, we can go this mumbo jumbo, blah blah blah. All right, I'm not gonna lie, I'm gonna do something crazy and put sheets over my windows so you guys can see a little bit better, because right now you can literally see my windows reflecting back at you. So give me 1 second. All right, not perfect, but better. All right, so I want to bring your guys' attention. We can get rid of all this stuff and just look at this white line right here. Now this white line is the 200-week SMA. If you've seen my video last week, you'll know exactly what I'm talking about here. And look, every time we touch this 200, bang, 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 we explode. And this actually works with most assets. This is Bitcoin, boom, bang, bang. Here we are almost again. And let's look at Microsoft real quick. See, Microsoft. Here we go, same thing, bang. Last time I touched it was way back here. Bang, bang, almost here, and here we are again. Let's go look at Oracle. Oracle, what do you know? Here we go again. Bang, bang, bang. Here we are. So this is why I decided to accumulate some Oracle, some Microsoft, and why I'm currently accumulating MicroStrategies. Now the only thing is I won't accumulate any leverage MicroStrategies until Bitcoin touches that 200-week SMA. Then I'll consider it, because MicroStrategy is already volatile as all heck, and I don't know who needs more of that. So yeah, look, MicroStrategy is already a leverage proxy in itself, so I don't know if I want to leverage or leverage proxy. You're getting pretty crazy now. So yeah, that is why I am accumulating and have the positions that I do. That's all I got for you guys this week. Love y'all. I'm out of here. See y'all next time, family. Peace.